Over the weekend, Iran launched a large-scale attack on Israel. Over 350 ballistic missiles, cruise missiles, armed drones, and rockets were fired from Iranian soil, as well as Iraq, Yemen, and Lebanon, towards the State of Israel. Across the skies of the Middle East, a coalition was activated to counter this attack, marking the start of the IDF's Operation Iron Shield. The Israel Defense Forces, together with the United States Central Command, the British and the French armed forces, and other partners, operated together in real time in the air, on the ground, and at sea. Defense systems were activated, the threats were intercepted, and Iran's attack on Israel failed.
Coming up today, an analysis of the situation in the Middle East, what could happen next and what that means for financial markets. Gold staying well bid, along with other commodities trading up. US retail sales coming strong, sending yields higher, and Tesla stock nosedives again. And welcome back to the Click Capital channel, everybody, and what's set to be another spicy week in financial markets. Thanks to the massive escalation in the conflict in the Middle East, something we haven't seen in decades, and that played out across markets today. S&P 500 actually gapped up about 30 points, and then sharply reversed course, finishing lower, and a very strong risk-off mood across markets today. Energy, the only stock sector, still above its 20-day moving average. All other growth sectors, including the S&P, Nasdaq, Dow and Russell, now below their 50-day medium-term moving averages. The only thing that's uptrending is volatility, bond yields, oil, gold, the dollar, and inflation expectation. And stick with me because I'll come back to the charts a bit later on and show you some of the things I'm seeing out there and how they could play out this week. First, let's just take a step back and assess the situation in the Middle East. What's going on over there, what could happen next, and how we got to this point, and what it means for financial markets. So for those of you who don't know, let me give you a quick recap. About 2 weeks ago, Israel attacked the Iranian embassy in Syria, killing 7 Iranian military generals, in what could be a move from Israel Prime Minister Netanyahu to draw attention away from the Gaza Strip, where they're losing political support, and refocus that attention on Iran, as they knew Iran would give a response to their attack on their embassy in Syria. And a response they did. Iranians came out with a large-scale attack, sending over 350 missiles, drones and rockets Israel's way, and the US-led Western Alliance pretty much shot them all down. Showing first how technologically advanced the Western Alliance defenses are, showing Iran and others around the world that we have military and technological superiority. And luckily, none of those missiles got through, because you can imagine the potential loss of life and casualties if they did, and that would take it to an even higher level of tensions that we have now. And so where do we stand now? Well, the ball's back in Israel's court on how they're going to respond to this huge escalation and unprecedented attack directly from Iran soil into Israel. For years and years, Iran's just used their militant subsidiaries, Hamas, the Houthis, Hezbollah, to direct attacks towards Israel, as the Iranians openly state they want Israel wiped off the face of the earth. And so it's without a doubt, we're now in a completely new paradigm in the Middle East, something we haven't seen since the Yom Kippur War back in the 70s. A bunch of Arab countries ganged up and attacked Israel. US-led Western Alliance stepped in back then to defend them as well. And pretty much since then, there's been a lot of back and forth, as Israel is the only Jewish state in the Middle East, surrounded by over 20 Arab countries, many of whom don't really like the Jews. And one thing's for sure, this is a big political problem for Biden. Could have a big effect on his chances of re-election. It's likely to keep a bid in oil, and thus by extension inflation. And this has huge ripple effects throughout the economy and financial markets as well. And it's not really a good look for Biden, after he previously criticized Trump back in early 2020, saying that he doesn't have the authority to take us to a war with Iran. However, up until Biden got back into office, things were relatively calm in the Middle East. Trump was actually on a path of brokering several new and historic peace deals between Arab countries and Israel to dial things down, and cooling tensions down there to an all-time low between key Arab countries in Israel, including Sudan, United Arab Emirates, Kingdom of Bahrain, and advancing cooperations with the other significant Arab country of Saudi Arabia. And that was the first time relations were normalized with Israel in over 25 years. He also was the first US president to meet with Kim Jong-un, show him a little respect, and dial down things there. He also sought to end frosty relations with Russia and become more friendly with Putin, and they actually did agree to work on defeating ISIS together in Syria. However, as we all know, the mainstream media turned that into a conspiracy that was proven wrong, and they were more focused on his mean tweets. Like this one he made here in July 18, directly to Iranian president. Never ever threaten the United States again, or you will suffer consequences the likes of which few throughout history have ever suffered before. We are no longer a country that will stand for your demented words of violence and death. Be cautious. And while some saw that as inflammatory, it actually did work. And just looking at the facts, President Trump was the only US president to not actually start a new war and actually dial things down, to not only keep the peace, but actually advance it to a new level. So it's become widely accepted that Joe Biden's foreign policy is a failure. Ever since the failed pullout of Afghanistan, in which innocent US troops were killed, Russia then went into planning an invasion of Ukraine, which took place 6 months later. Then we went on to Iran, instructing Hamas to launch a large-scale attack into Israel early October, and set off a chain of events that are still escalating today. As the current US leadership is being seen by its enemies as being soft-footed, an opportunity to advance their territory and other ambitions. And I know this is a controversial political subject, defending Ukraine, defending Israel. However, I think we should all keep in mind here in the West, if democracies were toppled by autocracies, Russia took Ukraine, Iran took Israel, China took Taiwan. Who's next after that? Maybe us down here in New Zealand? And that's why I think it's important that democracies around the world join hands and stand up and defeat these dictators, because we really are in a world now of democracy versus autocracy. And China do have ambitions to dominate Asia Pacific. We've seen that as they've continued on a path now in corrupting these small island Pacific nations that sit just to the north of Australia and New Zealand, countries we've helped for decades in emergencies, social stability, food, so on and so forth. They're now selling out to the Chinese as they install more and more military assets surrounding us. Not only that, they also seek to influence our elections and politics. They've been caught red-handed many times, and also apparently financing the so-called Natives Maori Party as they seek to influence us socially and politically, possibly military in the future, and we've actually had to create laws to stop them from buying up so much of our farmland, as like I said, they do have quite aggressive ambitions that us as the West need to push back on. And so it looks like Biden's lost control of this situation, and it's no surprise that Biden is urging Israel and Prime Minister Netanyahu to not respond back to Iran's attack, because Biden's thinking of Biden. He doesn't want oil to spike, inflation to spike, and hurt his chances of re-election. However, that's easy to say. How would the US government respond if China or Russia sent 350 missiles and rockets onto US soil? Pretty sure the states wouldn't stand there and just take that. That looks weak. Israel has to respond. It's a completely asymmetrical response Iran gave back to Israel. Israel did take out one building and 7 military personnel of Iranians. However, the Iranians do have guts, sending 350 missiles back to Israel in what appears to be a 10x response, and willing to go to war with Israel. However, they might have been surprised at how advanced our defensive systems are and shooting down all of their rockets. If that's how good our defense is, you can imagine how good our offense is. Israel is likely to respond to Iran, even though the US said they'll not take part in any retaliatory action. They're only going to provide defensive support, not offensive support. And Israel has vowed to an exact price on Iran's attack, to which Iran has warned them again against any further retaliation. And if I was the Iranian leadership, I'd be a little worried about what could be coming back their way. To which they said Israel knows what our second retaliation would be, hinting at nuclear war if they can. And so that's where we stand now with this whole situation, waiting to see what Israel's going to do back. They may not need the US's support with going on the offensive, and they're likely trying to work out right now what they're going to do, but they have to do something because it'll be seen as weak if they don't. And they're a proud people, a nation. They're not just going to stand there and let the Iranians, who openly state they want the Jews eliminated, and just to send 350 missiles and rockets to their country, and even though they were successfully defended and shot down, they have to stand up and show some strength too, just like any other country would if they sent 350 missiles our way as well. So gold had already been in a bull rip going into this before Israel attacked Iran. It's no surprise it's remaining well bid, and is likely to do so for some time, as this situation is not going to go away anytime soon. You can see that in the price of gold futures today, actually ripping up on a momentum upward thrust. Same with silver as well, and crude oil just sitting there above $85 a barrel and consolidating somewhat. Got the agricultural commodity fund, high highs, high lows today. Cocoa ripping up to a new high, and coffee breaking out as well. And once again, commodities has been the place to hide out. Not only stocks, but also Bitcoin have sold off this weekend into the start of this week, and no surprise, volatility staying well bid as well. VIX now at a 19 handle. Just 2 weeks ago, we're sitting down here at 13. Option dealers as well, asking for 9 points of premium above realized. They're forecasting volatility to stay higher. And we've actually got a little bit of a breakout in the implied correlation index. And that basically measures the intercorrelation of assets. And typically when markets are calm and ripping higher, that goes low. However, when we see big sell-offs, crashes and so forth, the whole market can move as one, as there's a big liquidity drain, just like we saw in COVID when this index spiked above 85%. You could think of that as like the whole market getting margin called and there's just indiscriminate selling across the board. Interesting as well, some of my long-term viewers will remember the spread between bond market volatility and stock market volatility had recently reached all-time highs not seen since the great financial crisis 2008. However, that's broken down now, meaning stock volatility is starting to catch up to bond volatility. And so going forward, the concern now is this geopolitical tension is going to translate into a lengthy bid in the price of oil, which is then going to give tailwind to the already increasing inflation. And like I said, it's not going to be good for Biden's chances of re-election. If we're going into November with oil above $100 a barrel, and he's already depleted a lot of the strategic petroleum reserve, doesn't have much ammo to work with there, since those levels are back to 1983. They're actually trying to replenish it. They actually pulled back and said they're not going to buy anymore. In other words, they're waiting for oil to come down to buy more. And this is why Biden doesn't want to support Israel's response to Iran. He just wants things to cool down, keep the price of oil down, help his chances of re-election. However, Israel's probably going to go out on their own and attack Iran without the assistance of the US. We've also got other commodities like aluminium, nickel prices surging after more fresh sanctions on Russian metals, and that's why commodities are the winning asset class this year. The traditional flight to safety asset of treasuries is not really working with increasing inflation. That's why we've got bond yields up and bond prices down. Also got defense stocks holding up pretty good as well, as taxpayers' dollars is going to keep flowing through to them. And this is in a backdrop when the US economy is still powering ahead. We saw that today with US retail sales surging 0.7% in March, well above the economists' expectations of 0.3%. And so it's no surprise that that sent up treasury yields as well, like we can see today with the 2-year at 4.92 and high highs, high lows again in the 10-year, getting up to 466 today, with a downward thrust momentum signal in 20-year Treasury bond ETF and a bit of a move down in high-yield bonds as well. That's a clear risk-off signal we'd been looking for. Took out this support zone, and often high-yield bonds will correlate with stocks and just the overall risk mood. And this, coupled with a higher VIX, is going to keep pressure on stocks, because a large part of institutional money is what's known as vol target, in which they target a certain level of volatility, and that's based largely on things like the VIX. So the higher the VIX goes, the more those vol target funds have to sell equities to keep the volatility of the funds in line with what they're targeting. However, the market's still hanging its hopes that these stronger than expected retail sales doesn't have to raise worries about rate cut delays. And so in addition to geopolitics, inflation, bond yields, what's also going to influence the market over the coming weeks is the start of Q1 earnings season, which didn't really get off to a good start on Friday thanks to JP Morgan, actually down 6.5%. Really big move for the largest bank there. And we'll have more coming this week and getting into the thick of it next week. And in the face of everything that's been going on these last couple of months, massive repricing and the amount of Fed rate cuts we're going to get this year, escalating geopolitical tensions, stock market had been holding up. However, looks to finally taken notice now of what's happening around it. And this could be the start of more to come, especially if we see oil spike towards $100, and especially if Israel wants to come back, show some strength, and give a huge response themselves back to Iran, in which they're likely to be much more successful with hitting their targets, compared to the massive failure from Iran's campaign, in which they did not succeed at all. However, that's not going to shake the bulls out. Still got companies like Wedbush saying the latest tech sell-off is a buying opportunity, as earnings could power stocks 15% higher, as they're expecting this season to be strong as the AI frenzy continues, and no doubt that's true. Doesn't matter what's going on in Iran and Israel, still plenty of money being spent on AI, so the tech companies should come in with good numbers. But more importantly is investor sentiment and their response to all of that, and what looks like we're moving into a higher VIX environment. Also, one of the most important stocks, Tesla, getting weaker again on news that it's laying off workers and losing key executives. Still got some problems in the company, and the Cybertruck and robo-taxi could present huge risks as well as opportunities if the rollouts are not smooth. And there's a look at the daily on Tesla today, pushing down against the support zone. Actually may have just lost it as I speak after hours here. 160 is kind of like the last stand, and it's an area I've had drawn in there for a while. And if we lose that, the next target may actually be $100 a share. And there was weakness right across the board today. Apple losing its 50-day again, same deal with NVIDIA. And Meta, along with Microsoft, holding up a bit better as Amazon. Holding up the best is Alphabet, Google. And just looking at economic economic data. There's the retail sales year over year, 4%, better than expected. Same with month over month. Looking out to tomorrow, we get a little bit of inflation data out of Canada, housing data from the States. Into Wednesday, CPI from the Eurozone, a few Fed speakers going into Thursday as well, and a rather quiet finish on the week. Not too much out on the economic data front. Fed Fund futures moved back, pricing in a cut come September today on the back of that retail sales report and move up in bond yields. And the greed index is now the fear index for the first time since October last year. Definite change in the mood of the stock market here. It's finally woken up to what's going on around it. Corporate insiders, nowhere to be seen, sitting aside in cash. Although we are very oversold in the short term, only 9% of stocks above the 20-day average, and that's just about as low as we get. Last time the market bottomed out in late October, it was around 14%, and a bit of a breakdown in long-term breadth, but we've still got 2/3 of stocks above their long-term average, but we're starting to see deteriorating breadth. You can see that in the amount of new lows. NYSE creeping up here today, along with a dive in new highs. Same deal on NASDAQ, bumping up and stocks hitting new lows. In addition to commodities, a bit of flight to safety and raising of cash. You can see that in the dollar index futures trading up again today, and another momentum upward thrust in the spread of commodities versus stocks, and higher highs, higher lows for inflation expectations. Red across the board in every stock sector. There's no hiding out there today, with the worst performing factor, growth stocks, down pretty sharply here, along with momentum stocks. Bit of hot air coming out of the market. Out of my top 10 picks for the year, it's actually only cannabis finishing high today, on hopes we may see the long-awaited rescheduling from the DEA come out this week. Heaps of volatility in Trump media, down 18% today, starting to look a bit technically oversold here, and all the crypto companies as well. Coinbase losing its 50, along with MicroStrategy closing below its 50 ever since it went on this huge rip out of February. But ExxonMobil still well above its 50, and the meme space absolutely creamed today. And look at AMC on the path to zero there. Pull back in the stock. I did a deep dive on the weekend. A-Mark Precious Metals had been pretty stretched on Friday. Like I said in my deep dive, I'm looking for a pullback to the 50-day VWAP to potentially add to any long positions there. A little bit of a bid in some of these defensive stocks, kind of holding on here pretty good, and a little bit of a bounce back in some of these big financials as well. Well, we get to hear from Bank of America later. And so there we have it, guys. First day of trading and what's set to be an interesting week. Don't have much on the economic data front, so the market will really have eyes on Israel, how they're going to respond to Iran, and what that's going to do to oil and bond yields that are already spiking up. And the stock market is definitely now in a short-term downtrend, but still not even 4% off highs. Could potentially turn into a full-on correction. And if we were to do a 50% retracement from that rip up in October, that would take us down to about 4,700 on the S&P 500. And even if we were to retain this bull market, 50% retracements and parabolic moves are common and shouldn't be all that surprising either. However, we all know if things get bad enough, the Fed will be there to backstop it all, and the buy the dip algos will kick in, because we kind of live in a world now where these major global events, banking crises, pandemics, wars, they're bullish because it's more likely the Fed's going to flood the markets with liquidity. So I'm not calling for a stock market crash or anything like that. We may actually consolidate here and retrace a little bit, as we're very oversold in the short term. However, we could stay soft and weak here for a few months as the market works through these current events and higher bond yields. And I'd expect the VIX kind of remain bid above 15 here for a while, which should also keep pressure on stocks as vol target funds have to decrease their exposure. Thanks very much for tuning in today. I hope I didn't offend too many people with my political analysis. I always just try and stick to the facts and present my analysis of what it all means. However, it is just my opinion, and I'll keep doing my best to stay unbiased and try and make sense of it all for us traders and investors. Thanks very much for your support, and I'll see you again tomorrow night. Cheers.